Everyone, Kim here from Traders Club. I just finished live midweek update free event that I do for my blog followers, and it was a webinar that I did, and I keep forgetting to record. And so for those of you who was not able to make it to the session, so now I have to I'm gonna do one just for you guys. But I mean the live midweek update, it went about an hour and a half, but now I have to I'm gonna try to put this in a more shorter format, maybe 30 minutes. So just bear with me because we cover some overall market and what I think it could happen next several months or so. So currently you're looking at Dow Jones Industrial Average ETF here, diamonds, and everything about this stock or about this ETF looks bullish, right? I mean, if we just go to weekly here on Dow Jones ETF here, I mean, you can see this just bullish momentum just build up here, right? Just looking at this chart, looking at the tape, I'm not gonna lie, I'm not gonna say that market crash and collection is gonna happen soon or what. I'm not gonna say that. It looks very bullish. However, right? There's always but, right? I mean, there are some things that I have found there are some things I found that it is troubling, and I know that I've been saying troubling for a really long time. And so bear with me because I mean, yeah, I really think that bulls really dodged the bullet there, because I mean, you see that kind of candle here and you see that kind of candle there, and if you saw both of those and you said, well, we're going bullish here, well, I agree with you, and you said that we're going bullish there. I don't know, man. I think that you're being more biased, right? You think the market always has to go up, and I think that bulls really dodged the bullet there and they got a good break. We continued, which is a good thing. I'm glad the market is continuing. But however, because of that, because of what happened right here, and because I feel like we probably needed some correction for market to rest and then continue, maybe that would have been better, but we didn't get that. And because we didn't get that, we formed something. And let me share that with you real quick, what we have formed because we didn't get that rest. We're looking at Dow Jones Industrial Average here, ETF Diamond, and we're looking at daily chart and looking at my MACD study. And I want you to see something here, okay? All right. Yep, there you go. So first of all, I want to let you guys know that there's only a certain amount that it can run. I mean, I've been talking about this for weeks now, that this is amount that it is willing to run, right? I mean, there's so much it can run before it has to recycle, before it has to rest. Just like you can't work every day without a sleep. You need to sleep for a good amount of hours to be feeling good and come back to work next morning and work hard, right? And the same thing kind of like that with these stock market indexes. A lot of times buyers could get tired and whatnot, but I really believe what's happening right now is this, because a lot of times the chart itself, what they do is they give this vibe of their sentiment, of their health, and of their mood, right? I like to always compare it with people, because I don't think that market has emotions, but people who trade the market does have emotions, so that we can see those emotions through this technical analysis, looking at the charts and different indicators and whatnot. And what I am seeing is this. What I am seeing is that we didn't get proper rest. So then what happens is it formed divergence, because the reason that it forms divergence is because it has been pushed where it shouldn't be pushed. Just like when you work overtime or you work weekends without pushing or without resting, you will probably form a divergence. It could put you on a graph, and that's kind of what's happening here. We're probably good rest probably was here, would have been maybe a good thing, but we didn't get that. We pushed higher, thus forming a divergence all the way through. And after that divergence, what happened? We did have a correction. And same thing here. We'll probably had a good correction here and then continue, would have been better. Maybe had a good, good sleep, good rest or whatnot, but we didn't get that. We continued. What happened? We formed a divergence, and here in bearish divergence, and then we form a topping process, just like forming topping process there about 2 months or so, and then we had that correction. And what's happening is very similar what happened here, here, and here. Okay, like I said, we that bulls dodged a bullet there, probably needed some rest there, but we didn't get there. We pushed again, yet again, right? And then so then we form another divergence, bullish divergence on this daily chart. So then now you look at this, we're just looking at just about a 1 year period of time. Every time we form a divergence, it seems though it plays out every time that we form some kind of topping process here, topping process there, topping process. That's what I'm guessing. There may be 2 months or so of maybe triple top, double top, or something like that, until we get some kind of correction like this, something like that here, because that's what happened last 2 times. Also, just because it's being at its all-time high on Dow Jones here, getting or around the vicinity, it almost kind of also looks like we possibly forming some kind of head and shoulder. And that's just speculating. I don't know if that's gonna happen or not. I'm just speculating because that's what we did here initially. That's what we did here, right? I mean, it was a triple head and shoulders, right? Left shoulder, triple head, and then right shoulder, bam. So we're possibly in that level where that it might be forming something like that. Again, looking at the tape itself, looking at the tangible price itself, we don't have anything of that. But looking at these different indications of the past, though, that it looks like that could be that's in the way that it could be coming here. And I want to go further. Out. Okay, we're looking at daily chart here, and we go further out. It seems to be playing every single time. We get the here, and we got it here. We even when we had a bullish divergence. Okay, let me just do that real quick so you guys can see my chart here. Okay, let me do that one more time. Yeah, we had a divergence there, and then we had a correction here, well, which that led to a crash. I'm not saying that's what's gonna happen, but that initially we had an early signal of that, and then we had a bullish divergence here, which is a very good thing. That was a catalyst of this huge move, right? And then we had another bearish divergence there, here, and then we had a correction. Divergence here, we had a correction. Divergence here. I'm going too fast, right? And then correction. Divergence here, correction. Divergence right there, divergence there. And is there a possibility that dive and correction would happen? Well, I'm willing to bet on it. I'm willing to bet on it because it seems like every time when we form a divergence, bearish divergence on this MACD, it seems like it played out every single time. The problem is sometimes it may not play out right away because you could form a some kind of head and shoulders, so it could take time. Right? I'm not saying it's gonna have a correction tomorrow. Obviously, it's gonna take time to have that topping process. But what I'm telling you right now is everything looks bullish, yes, but I'm not going long with indices because I believe we're at the top of this move, and we are going to have some kind of correction like this. It could be either head and shoulders, or it could be triple top, double top, and then have a correction. Okay, let's look at SPY here real quick. SPY is the same thing. SPY is just basically just looking at the daily chart. Everything looks bullish about it, but again, we are finding similar thing. What I talked about before is that we are finding, we are getting into that level of run. This is how much that if you measure that arrows, they're exact same size, measure, move, and then what I'm seeing is we're looking something very similar to what's happened before. Okay, we had an initial a pullback, and then we thrust higher, but that was it. And then we had that grind action, and then we ultimately formed triple top, a double top, and then we had a correction. And it looks at the just current market sentiment, it looks like it. We're having a lot of up and down movements here. That's what's happening, and that's kind of what happened at these levels, that up and down levels, a movement. So I think that's what's happening here. We're forming some kind of topping process, just like Dow Jones, S&P 500. Looking at the MACD study here, we are seeing very similar to Dow Jones here. Just come back here a little bit. You can see that this is almost like early indications before it gets its crash, or sorry, not crash, correction, that it forms that divergence, and then we get the correction. I mean, obviously it takes about 2-3 months of a topping process before it does that. But I mean, you know what I mean? It happens every single time. Let's go back a little further here. All right. I mean, it seems like even here was that. Nope. Just, I think just here was divergence there, right? So just looking at that, you know, I just feel like, you know, we're looking at 2011 to 2013 and lost 3 times when we had a divergence. That's what, you know, when we had that correction here. And so, you know, not right away, we had that, you know, initial topping process here, and then we had the correction. So that's kind of what I'm proposing here, that could be in the way again. Before that happens, it could be another, I don't know, 2 months or so, we could have a topping process. So what I'm not going to do is I'm not going long with indices. That's what I'm not going to do. I might go long with stocks and stuff like that, with different emerging stocks, but I'm not going long right now, and I'm not really confident in the overall market. Just looking at these things, you know, what I want to show you right now is also go to NASDAQ itself. Actually, let's look at MACD study here. This is NASDAQ, okay? This is NASDAQ, and first of all, first troubling thing is we are forming all kinds of divergence here, and it seems to be always happening before its corrected move. Right? It seems to be always having that divergence before that corrected move happen. Right? This isn't divergence, but it started from that. So this is not, but here and there. You know what's more fascinating about this is when I go weekly, it gets a little bit more intimidating. Let's go to weekly here. Because it happened before, and I've been talking about this ever since, like, I don't know, last October, September. I've been talking about this, and you know, because it's a weekly chart, it could take time. It could take, you know, months before it actually plays out. But then, you know, definitely something to be cautious about, something to you know, something to be warned, and something to take heed about. You know, you just look at these. We're still there. I mean, obviously this is poking out, so maybe it may never going to play out. But you know what I mean? We're continue to form this divergence before that initial correction happens. So I mean, because we also have Dow Jones and Spider and you know, happening, and also with the QQQ with you know, forming that, what is that you know, head and shoulders formation on this chart here. You know, when we go to on this chart here, that's also troubling. I've been talking about how, because where the location it has formed, that's why it is more troubling for me as well. It's not just because head and shoulder itself, okay? Not head and shoulder itself doesn't trouble me much, because we could have head and shoulders here. Remember, never played out. It never played out. But then, do you remember this here? This long run. And then we had the initial head and shoulders. I mean, it wasn't textbook head and shoulder, but it had its sentiment, right? It has its sentiment here. Well, obviously had a huge decline. That was the crash back in 2008 there. And I'm not saying just yet that that's what we're going to have. But, you know, head and shoulders just forming after, you know, this move compared to this huge run. This run wasn't much. It was not even 50% of what we had back here. But now we do have this run to count for, right? And so then we are having almost, you know, very textbook like head and shoulders forming at the top here. And we're continue to grind. We're not making higher high here. We're continue to grind at that. We're a little bit higher than, you know, that that right shoulder level. But I mean, these things never gonna play out perfectly. Just you can see that even here it wasn't a perfect scenario, but it had this sentiment. What I mean by sentiment is that head and shoulder isn't head and shoulder just because it formed the head and shoulder. It is head and shoulder because it has a psychological behavior to it. What I'm saying is that, you know, it gets pushed, right? The bulls are running because bulls been running for so long, right? And they continue to run. It's almost like our human being. Once we're in a good state of mind, or for once in a good pleasurable times, we don't want that to end. And same thing with these bulls and these buyers and these, you know, traders and investors. So then they had this run, and then we went up and then came down a little bit. They said, nope, we're gonna go higher, just like we made higher highs here. And then sellers came down. They said, nope, we're not gonna go any lower. We're gonna go higher. But this time they weren't even able to make up to high, you know, make a higher high like it did last time. And they got tired. And as soon as they got tired, what happened? Bears took advantage and just took this thing down. Took this thing down. Well, because one of the reasons is because we're looking at weekly chart, we're looking at very big broad view right now, so just keep that in mind. But one of the things that, you know, big bulls got tired is because they had this tremendous run, okay, tremendous run. So I mean, at that point, just to pull all the way high to make higher high, it just wasn't gonna happen. It just got too tired. However, at this point, when we did have a head and shoulder like formation, just because we only had this much run, you know, they still had some momentum, found some support here, 200 SMA, which has been support back in the day, and then we found another, you know, run here. But now we're forming head and shoulders at the top after this kind of move. That's when I get a little bit, you know what I mean, worried about the overall market sale, especially in NASDAQ. I mean, we already looked at Dow Jones and the S&P 500 with the, you know, MACD divergence and, you know, what could be happening. Again, you know, the tape itself, the trend itself is strong. It is in an uptrend. However, we have these early indications that possibly, you know, that there might be some kind of correction here. And the one troubling thing about QQQ and NASDAQ is that if it starts to have a correction here, if it breaks below that neckline level, which was here, this is a neckline level here, I think that's when, you know, things could be trouble. If we find support that neckline and just continue, I think we can maybe find some momentum just like it here. But I'm wondering if that's going to be the case, right? Just because we had such a phenomenal run, and just like here we had a phenomenal run here. So now is that bulls, long bulls, right? Are they tired? So if they come back here and start coming down here, they probably going to try again to, you know, test their neckline level. And if that fails, this could have some sizable pullback here. So that's kind of what I'm looking at on the overall market. And the you know, in the overall market indices, basically, if I, you know, summarize this whole thing here, is that you know, it's bullish. Everything looks bullish. You know, just looking at the tape itself, just looking at the chart itself, just looking at this, you know, the trend itself, we are making higher highs and higher lows, and where it seems to be continue to trend higher. And we did finding some support there, but as we go deeper with different indications, look at the overall health, and I start to see that, you know, the buyers are starting to get tired and they need to rest. They didn't get a rest back here, which probably was a good thing to their rest, but they didn't get that there, so they pushed higher. But I think this time when they really need to rest, which means it's gonna have some kind of correction once they, you know, they try, you know, hard, probably in next couple months of topping process of consolidation, and that gets broken, probably gonna, you know, I think we're gonna come back at least to 136 on Dow Jones, and possibly back down to 134 level, which is the uptrend level here, coming down all the way back, I think, from 2009. So probably at least that level is gonna, you know, the correction is gonna, when it does happen, it's too early to say, but I am saying that we're at that, you know, we're probably at that level where we're gonna be at the level, we're at that level right now, probably that we're at the topping process level, which is next 2 months or so. That's what's gonna happen. Quickly here, I wanted to look at Apple. Just quick update here. This is what I'm seeing on Apple here. Let me just say, let me just take this out. Actually, I'm just gonna put that there. I'll just explain a little bit more. Let me just go back to history and how Apple reacts to that. You know, to be honest with you, on this day, right here, we had a huge hammer, gap up, huge candle, we had what it looks like some kind of a bullish flag, continued another maybe stair-stepping pattern, which was a bullish continuation pattern. However, everything looked bullish. We gapped down, it tanked. Okay, and that was just below 50 EMA. 50 EMA is this pink line coming over here, this daily chart. 50 MA, 50 MA, that last time got tanked, this time got tanked. Here again, here, this was when everybody was calling bullish divergence. If you look at your MACD, you will see divergence here, bullish divergence. And then we broke out of this triangle formation, and then we gapped up, and then we went close to that 50 MA. I call it radiation of resistance because it couldn't even get there, but it was close to that. And then it also hit with the downtrend resistance level and horizontal resistance level. So that was important point, which I was I went short at that level at open. But even though how bullish it looked on after breakout and gap up with the bullish divergence, after a little day, and even this day, it looked bullish. It's like a bull flag. That actually looked like a bull flag. If I bring up this, looks like a perfect bull flag because you can see that volume also has been declining here. So this was a textbook bull flag. Could have continued higher. It didn't. So now we're at this level. We did break above this long-term downtrend resistance level, but people are calling this divergence happening not on this chart, but if you look at a MACD, other indicator, there is, I wouldn't call it a real bullish divergence, but it has a sentiment, but I don't want to go into it right now. And then we are forming yet again what? We did have a gap up here, strong candle there, and then we have what? It looks like we are forming bullish flag again with the falling volume there, and then 50 MA is there again. So it's kind of like, man, remember the last time that happened and then 50 MA was there, and this time we have 50 MA here yet again. And this is a reason why I'm not long or short, just because first of all I'm not long because I'm not short because we broke above the long-term downtrend resistance level. Because of that, I think that it's losing some of its momentum, so I'm not short yet, and I'm not long because of that 50 MA, because it has done some damage before. So I want to see how it reacts. And also I've done some Fibonacci retracement study here, just measuring this move, and you can see that right at 61.8% retracement level. This is where it you know what I mean, it got stuck there. So I want to see if we can break above that. Even if we break over there, we got 50 MA waiting. So I want to see how it reacts 50 MA, and then I'll make decision from them. But from the looking at the whole analysis, I've given you bull case versus bear case, and I'm just kind of a neutral. I need to see what's going to happen this couple days, and by end of the Friday where it close with, before I make decision. Lastly, I want to look at Blackberry, because Blackberry, I do believe that it still looks bullish. First of all, we did have a golden cross here, 100 SMA, 200 SMA crossing, which means that long-term momentum has been shifted to bullish side. Okay, it has came down here, and then now it's shifted at this level. And also, you can see this fan line coming over here, which has been working as support at that level, this level, and that level, and then we bounced here, and then we gapped up at this level, and we're continue to sit on that new old resistance and new support kind of thing. What I like to see was, because I don't know what happened, but I guess the last 30 minutes it sold off, but it looked bullish. If that was the case, I really thought there would maybe some retracement and then go higher, but just because of what we closed with today, you know what I mean, it's hard to say, but we're losing some bullish momentum there. So after a gap up like this with the high volume, maybe a couple days of a retracement or some consolidation like a bull flag or something, and continue soaring higher would have been very good thing to do. But today, what's happening with that, I won't be surprised if it comes down, maybe test, it fill the gap, and then continue or meet with the 10 EMA there, that blue line, or if we can find some momentum tomorrow. I mean, Blackberry been in at that wild stage. We're a little bit wild here, so anything can happen at this level. What I'm trying to really say is, as long as we keep that gap open and we kept going, we could classify that as a breakaway gap. And I love breakaway gaps because breakaway gaps could be very beneficial. You know what I mean? That was probably that probably was more like a breakaway gap there, and that initially that little gap there was breakaway gap, because it really, that's not rear gap, but I mean it gapped up, and that was somewhat, and then this gap there, it was initially filled though, but it had that momentum going there, and that gap there, it was a huge momentum here, and this gap, wasn't true gap because we have a wicks colliding there, but that was good momentum to get up here. So now we haven't seen that gap up yet until today. So that gap, I wanted to keep it open at least several days, and then we can find some momentum, keep that gap continue to be open, so that that gap could be a catalyst. But in the event that it feels that it might even come back down to test this support, even the 10 EMA. So I'm still long on this. Some of you guys following me on my blog, I went long here, I went long yesterday there, and then I added it this morning as soon as it opened. So I'm holding some positions that I am overall bullish, just because we are trading above all moving average. If you're just looking at the price action here, when we trade above moving average, good things do happen. First of all, because the golden cross is backing up too in a long-term sense. But here we had all the moving, we were trading above all the moving averages, and then that's what it did. And here also we're trading all moving averages, that's what it did. And then this is a level again that we're having all these moving average, we're trading above all the moving average. We had all the crosses happening at that level. So I'm expecting some bullish momentum here, and ultimately what we need really is close above 1814 next week sometime, and then after that it could come back down, test it as a new resistance with the new, as a new old resistance as new support now, and then we could go higher. You know what I mean? Also, if I just do Weinstein stage analysis on this thing, just look at it. Let's go to weekly here and just quickly end with that here. I want to look at line chart to show you a little bit. So if I just look at this, weekly chart here, what we're looking at, with the Stan Weinstein stage analysis is basically what he's saying is this is stage 1, okay, and this is a kind of beginning of stage 2 that runs all the way through, okay. This is a beginning stage, and stage 2 is at its fullness, and then stage 3, and then stage 4 tankage, right? And then that stage 4 initially just did all of that. So now we are back at that level. The good thing about that is we never came all the way back down to that level. We're kind of actually, we, in a sense, you could say we're making, higher lows, but you know what I'm talking about. So it's a good thing that we found support not at this level, at that level, so we're even. You know what I mean? So here, let me just clear this here. So basically, looking at this weekly chart on Blackberry, we could be at that level here. I'm not sure how long it's gonna grind. We really need to break this 18 level. With the earnings, the great earnings, with the gap up, that could really be a catalyst. So if we can just close above this just strong support that coming down here, that level, I can see that this is a stage 1 turning into stage 2, and then stage 3. Let me just draw that better here. Get out. Okay. So let me just draw that one more time right there. So this could be stage 1, and then turning into stage 2, and then let's say as time goes by, years has gone, and then it could find some momentum to maybe find that great stage 2 at a strength, and then find this momentum get up to these levels, these just strong pivot levels. I mean, I'm looking at this very, very long-term process, but just looking at the chart and just what the Blackberry has been doing, I think I am bullish on it, and I think in the long term I'm bullish on it. I think I'm gonna constantly watch Blackberry, and I'm gonna go long when there's opportunities and things like this. So, well, guys, thank you very much for watching again. And again, I made up to you guys because I didn't record the live midweek update, but I decided to do this separately, just because I know a lot of you couldn't make it to the the free webinar tonight. So hopefully this will be somewhat of a helpful to you, and I hope you guys have a great night. Thank you for watching, and I'll talk to you guys later. Bye.